All right, real life trading team. Here we are. Okay, so topic today, right? We're going to continue on with our series here of analyzing price action and volume. Also want to give you a couple of really good examples of that 5-minute 2-bar trailing stop technique that I've shared with you. So a couple of really good examples from yesterday. But before we jump into it, let me just check. Last week, unexpectedly, we got into a great conversation initially about some options and theta and all that. So before I jump into it, just real quick, is there anybody out there who has a current issue, question, anything that they want a little direction on? Anybody who's got an just looking for a little bit of help on something, because it's, it just so happened that last week it was like the right timing that we got into a conversation about some option expiries and theta and all that. So I'll just give a second for anybody to chime in the chat there. If anybody does have something that they want me to address for them, give them a little feedback. I'm all for it. All right, I guess everybody's just questioning the markets because nobody has anything in the chat. So, all right, let's jump into. We're going to talk about, again, analyzing price action and volume, right? So I'm going to start off with, I'm going to start off by analyzing Johnny's trade right now. And this is a great example, okay, of how different traders approach things differently and how one trader sees something that another trader doesn't, and just trading styles. And it doesn't mean one is better than the other, or one is good, one's not. It's a great example of why we as traders need to trade our own plan, right? So everyone has their own trading plan. And just because a trade sets up that, Johnny likes, which is great, doesn't mean it necessarily meets my trading plan, and why I might, pass on a trade that he might be looking at, and vice versa. Right. And it doesn't mean that one is a better trader than the other. In fact, I would venture to say that Johnny's a better trader than I am. But I'm just going to give you an example of why you need to trade your own plan. And I'm just going to use the current trade setup as an example. Okay. So everybody should be seeing, let me see if I can hide this. Okay. Everybody should see my chart of Tesla here. Right. So looking at thanks, Win. Win's already, he knows what I'm going to ask. So thanks, Win. Anticipation right there. I love that. All right. So here is a current chart of Tesla, right? And we're looking at a 5-minute and a 15-minute chart. Let me just jump back real quick to a 3-minute chart, okay? Because this was the chart that Johnny was setting up his trade on, if I am correct, right? So Johnny was looking at this price action here. It is double bottomish, right? Right here, clearly. So I get the setup. I understand it. And that's part of, developing your trading style and becoming proficient with trading, is also to be able to look at somebody else's setup and understand what it is that they see and why they're thinking it, right? And again, doesn't mean that you have to take the trade. It just means that you should be able to look at somebody else's trade and go, okay, I understand, what he's looking at. And he may be 100% correct here. Only time will tell. But let me show you what I'm looking at. So double bottom, right? And Johnny's setup is 268.09. Let me just bring this up here. Doesn't have to be exact. 268.09. So basically breaking out of this, because it's clearly double bottom and it's in a channel, right? And then stop is 266.22. So it's down here. All right. And Johnny just said cancel Tesla. Okay. Thanks, Kevin. Appreciate it. But I'm still going to follow through with this, what I wanted to explain to you and what I'm seeing and why personally I was not going to take this trade. All right. So first of all, you got to consider the time of day, right? So it's 3 o'clock. It's actually 3:09 Eastern time. That means we basically have 50 minutes for this trade to work out, right? An hour. So, and quite frankly, for myself, I'm not a huge trader, big into getting into trades in the last hour of the day. That doesn't mean if I'm already in a trade, I won't stay in it and manage it. Of course I will. But unless I'm seeing just a crazy awesome setup, I'm likely not to take a trade in the last hour of the day. But that said, let me walk you through a couple things here, right? So here's the setup on the 3-minute. At this time of day, 3 o'clock in the afternoon, really after 1 o'clock, I'm not using the three personally. Again, I'm sharing with you my trading style and what I do. I'm not using the 3-minute chart for trading after lunchtime. I typically will use the 3-minute chart at the start of the market up until like maybe 11 o'clock. And even right around like, 10, really. So I'll use the 3-minute up until 11, but right around 10 o'clock, I'm also using the 5-minute, right? So 3-minute early on, and then I add the 5-minute. I'm looking at the 3-minute. I'm looking at the 5-minute. And as the day goes on, I'm then looking at my higher time frames as well, the 15-minute, the 30-minute, the 1 hour. I'm always looking at those higher time frames. We talked about that. That's the concept of multi-time frame analysis and looking at all those time frames. But at this point in the day, I'm really going to be focusing more on a 5-minute chart than a 3-minute chart. But just looking at this setup, right? And here's the setup here. We did double bottom, right? So what I'm looking at is, there's when I do these sessions, I always talk about what I'm looking for, which are double tops, double bottoms, hammer at the bottom of the move, shooting star at the top. But the key to all of it is volume spikes. And we've talked about that a lot, right? I'm always looking for volume spikes. And so, but it's also timing, right? You can see those setups and see that volume spike and still be wrong if the timing isn't correct, right? So timing is also a big part of this. And as I look at this, if I just, throw in just some thoughts into this trade, right? What Johnny was looking at. So here we have on the 5-minute, there's kind of a trend line here that's been following down. 15-minute, if you look over here, 15-minute, that trend line, still kind of holds. But really, I think if we took this and we kind of went like this, if you notice those pivots, right? Those pivots, I could probably pull this down and use more of the bodies than, so something like that, right? So we do have a very obvious trend line that we are up against, right? So when a trend line is nothing more than support resistance, just on a, on an angle versus a horizontal plane, right? So we're into this trend line. We would have to actually break out of that trend line, likely come back and retest it, and then make that move. So again, back to the time of the day, that's one thing I would be considering immediately is how much time do I have for this trade to work out? Okay. If I only have at this right now, about 45 minutes, that's not a whole lot of time for this to break out, come back down, retest. First of all, we're in somewhat of a sideways channel here, right? You can see that clearly, somewhat of a channel. Then we have the trend line. So we would have to break out, come back and retest either the trend line or this channel, and then move up. So immediately I'm thinking time. I don't have a lot of time. So immediately that's something that would be a strike against, for me anyway, against, taking the trade. Then on this, it's like, okay, well, let's just look at it. Let's analyze. It's like, okay, yeah, there's a volume. Like clearly you can see as price is moving down here on this candle here, you get that volume spike. So these three candles right here, these three candles are great looking candles in terms of what I look for, right? The volume spike, right? If you look left here, and I can squeeze this in a little bit here, right? Look left. These three candles here are putting in more volume than it has up until like back here, which was 10:50 in the morning, right? So you are getting those volume spikes, and that is what I'm looking for. But you have to put it in the context of everything, and I've already talked about the time of day, but then let's take it one step further, okay? Let's look at it in the context of the larger time frames. So yeah, on the 5-minute chart, this might be looking like exhaustion selling, or another term that I've thrown out there is capitulation, right? That we are ready to bounce. But then if you look at, just look at the sentiment of these candles, right? So big bearish candle, you can totally see about an equal wick on top and wick on the bottom, right? You can see that with volume picking up, right? Okay, that to me is more bearish than bullish. I think that's pretty obvious. But then look at this candle, right? Little bit more volume, tiny bit, or maybe about the same, doesn't matter. But look at the body of this candle compared to this candle, right? Much smaller body, right? So what does that tell you? It tells me that lot of volume, but there's more indecision here, because now look at the upper wicks and the lower wicks, and now there's a greater lower wick than there is an upper wick. Okay, but still close. So now we're finally breaking out. Finally, we'll see what happens here. This will be interesting to see how this plays out over between now and 4 o'clock. So the next candle here, right? Boom, there's your hammer. Okay, there's your hammer, and it's got decent volume. And I would normally be looking at that and thinking, okay, time to go long, right? That's that signal that I'm looking for. So, but then when I go and I say, okay, well, that's at 1400, right? I have to go over here and I have to look at this higher time frame and go, well, right around that time, 1400, right? We had a big bearish candle followed by an indecision candle, right? And you can clearly see that indecision candle. So right there, I'm thinking to myself, this is not ready. I'm not sure, right? There's clearly, just like I'm not sure, the market isn't sure, right? Because clearly it's an indecision candle. Then you're followed up with these two candles. So again, looking at the higher time frame, it's going to give you a better picture of the overall sentiment of price action. Now, we can also go into even higher time frame. Let's go into this is the 30-minute. Okay, so 1400 happened right in here, right? Okay, now if that was a bigger, if that was a better looking hammer, I should say, right? If that had a longer lower wick, and if it had volume, okay, I'd be looking at the 30-minute and thinking time to bounce, right? But it's kind of and then you get this candle that follows it that's basically the same, right? And the lower wicks here, they do represent the buying pressure, right? But if you look down here, right, and Win, how do you like that, Win? I got, by the way, I got this advanced volume profile from Win. And Win, I actually want to set up a call with you to since you've been using it for a while, I wanted to pick your brain a little bit on it. But anyway, if you look here, right, you get these two candles that are virtually identical. One's bullish, one's bearish. But look at the volume, right, down here, right? Obviously, the bullish volume went out here, and the bearish volume went out here, right? So it's still neutral, right? We still don't have a clear direction. Go into the 1 hour. And if we go into the 1 hour here, you can kind of see right here, right? It's still looking, this last candle, but this candle is now forming for this last hour, the market, it's still looking pretty bearish. So I take all of that in the grand scheme of things, in the big picture, and considering the time of the day, and I go, you know what, I'll pass, right? I would rather sit on my hands and not take a trade just to take a trade, right? So sometimes the best trade is no trade at all. So for me, and again, this is not a knock on Johnny because he's an amazing trader. This is just me and how I approach things. And that is what is a key takeaway, is that Wendy, yeah. Hey, Wendy, how are you? Yeah, I should say, yeah. Gisela, it's being recorded. Oh, good. Gisela just popped in and saw this awesome stuff. Cool. So again, not a knock on Johnny. This is just, me and my trading plan and why it's really important. The key takeaway here is that we all need to develop our own trading styles, right? That reflect our risk tolerance, our personalities, and then trade our own plans. And so this is just me sharing with you my own plan and why I wouldn't, and Craig is adding, Johnny did cancel the trade because of the time of day, right? I get that, right? So let's go back into, and again, you look at this, it still looks pretty bearish here, right? On the 30-minute here, on the 1 hour you looked at and you go, still looking pretty bearish. And again, it has to still break out. Let me now go back to this smaller time frame and tell you okay, let's say there was more time. Let's say there was 2 more hours, 3 more hours left in the market. Let's just, just for the sake of this example, let's pretend that there's much more time left in the market. I'm going to tell you how I would trade this, okay? Because if I look at this on the 5-minute, and I look at it on the 15, there's clearly a lot of indecision here, right? Indecision candle, small candle, another doji, indecision, right? Small candle. I look at that and I go, and first of all, I think you all know, because I've said it enough, I'm not a breakout or a breakdown trader, right? I don't like taking breakouts. I don't like taking breakdowns. The reason is because the majority of them fail. And here's a great example. Boom, right there, right? This candle right there. Now, does that mean that this trade won't work? No, it doesn't. But that is a failed breakout, okay? This is because people are looking at this, right? And let me just, since Johnny's trade is been canceled, let's just throw this up here, right? Let's just, and I'll leave that where it is. That's a pretty good stop, right? But let's just say people are looking at this and they go, well, if it breaks the high of this channel, boom, it's gone. That's what we've all been taught, right? So especially what they teach new traders. What they don't tell you is that the majority of these breakouts fail. And here's a great example. So how would I trade this? Well, and let me get rid of this purple line now, the trend line. If there was more time in the day and I was looking to trade this, and again, I do like this volume profile down here, right? I like that. That is what I look for. That's a great looking 3 candles into the bottom, making the new low with that volume, right? Beautiful. I love that. How I would trade this now would, especially if you look here, right? Let's just walk through all these candles, okay? Next candle, clearly selling pressure, right? The bulls are trying. At one point, this would have been a big bullish candle, right? But look at that selling pressure. Same thing here, right? So you look at all these upper wicks, you can clearly see the bears aren't gone, right? They haven't just, folded up their chairs and gone away, right? They're still there. They're still trying to keep price down, and they do succeed here in bringing it back down, right? So there's a pretty good battle going on here. Again, which is another reason why I wouldn't just take this breakout. And so when you look at this and you look at the sentiment, you go, okay, this would have been a big bullish candle. This would have been a big bullish. Like at one point, this was a really nice looking bullish candle, and then it comes up and then boom, it rolls over again. Double bottom, and you go, great, double bottom. Now if it breaks this level, it's off. Well, no, not necessarily, because again, most breakouts fail. So how I would play this personally, okay? Again, my trading plan, the way I approach trading, I'm just sharing with you. Doesn't mean I'm saying my way is the right way or you should follow my way of doing it. I'm just telling you how I approach it. I would want to have seen this close up here. I would want to have seen this candle close strongly above this level. And that's why sometimes waiting is the best course of action. Wait to get a close above this level here, and then set up. What I would do is I'll tell you exactly where I would have, if that did close there, I would have set up my limit buy basically right there. Okay. Also, see this, the volume profile sticking out here. This is a pretty big volume profile node sticking out. So if it can close above that right now, that basically is what's holding it. Part of what, no, I shouldn't say the only thing, but that volume profile node, that is current, that's the battleground right here, right? This sticking out here, if you look at on the day, right? If you look on the day here, the point of control, this one, and this one, those are the battlegrounds for the day. And right now, that's the current battleground. And the only way that it's going to go bullish from here is to get a close above here. Now, so Corey's asking, so do you miss some entries that don't come back? Sure. Of course, Corey, I miss them. But I would say that the number of times that I would get caught in a failed breakout or breakdown would be certainly greater than the number of trades I miss. Just, and again, that's part of the reason why I adopted, this way of trading, is because, yeah, I'm okay missing a trade here and there, right? If that happens. But Corey, keep in mind that the majority of times when something breaks out, it retests the level that it broke out and then it goes up. And that's the S curve, right? So that's the concept of the S curve. Break out, come back, retest it, boom. So that's basically all I'm doing, is I'm playing the S curve based on a support resistance level, right? So if this candle had closed strongly, let me just, right, let's say this did actually close up here, right? Let's say this candle closed say that candle closed like that. You get the idea, right? If I could get a strong close above that level, that's what I'm looking for. That tells me that there's more strength in the move versus what it did, right? Because all it did was it broke out of there. It triggered in all of the orders that were sitting here that people had placed to go long based on breaking out of that channel. And all it did was the algorithms, the high frequency traders, all that did, because look, our orders aren't secret, right? They're seen, right? All of us retail traders, we put orders out here, they're visible, right? The computers know they're there. So the algos. So all they're going to do is run all those entries, trigger everyone in, come back down and hit people's stops. I mean, it's the way that the game is run now because of the computers and the algorithms and the high frequency trading. So if I wait for this to close and then I throw in my limit buy down here, I look for it to come back, trigger, and go. Now, again, to Corey's point, do I sometimes miss trades because of that? I do, but I'm okay with that, right? Because the number of trades that I'll miss approaching it this way is going to be, in my opinion, far less than the number of times I would get caught in a failed breakout or breakdown, right? And you can see right now, right? If you get triggered in on this, and that actually would have triggered Johnny's order, right? That setup. Now you're just sitting here, right? Still chopping around. All it did was just break out of this channel and go right back down into it. Okay. So, and also keep in mind that, support resistance levels, right? They can get penetrated. We remove this drawing, right? Price can penetrate a level, right? That level is not broken until you get a close above that level, and then it moves away from that level, right? So in this case, right, all that happened here was prices went through it twice here and got rejected. It's right back down in. Okay. So anyway, I think you get the idea. And if you look here on the 15 minute, right? You can just see it. This is just right now sideways action that will probably just continue towards the close of the market. So, right. Let me remove these. Any questions on that? Again, just sharing with you my approach. Can I use the same analysis on the breakdown of NVIDIA? So, Gisela, was you talking about for today? Was that something today? Because I do want to show you something from yesterday on NVIDIA. So let's look at NVIDIA. Oh, bear trades. Okay. Yeah. So if you're looking to take this concept, right, and flip it, right? What you're going to be doing is you're going to be looking for the same thing, volume spikes, and then ideally some type of a shooting star, at least for me anyway. But I mean, here's a pretty big, doji candle, right? That if you think about the size of that candle from top to bottom, right? Again, another reason why I don't bracket this, right? And Corey, maybe this would be a good example of a trade I would have missed. Okay. So if I look at this and I go, okay, this is again a 5-minute chart. So let's go through this. This is for Gisela, right? Okay. So 5-minute chart. You get, we just look at this movement, right? You can see these upper wicks, right? Just, I mean, even though this is a pretty big bullish candle right here, look at that selling pressure up top, right? So even though it's more bullish than it is bearish, there's still a decent amount of selling pressure, right? And then you get this indecision candle, right? And look at how the volume dropped off a little bit, right? Big volume here, right? But clearly some selling pressure. Then you get this kind of indecision, spinning top candle, volume drops off a little bit, right? Volume picks back up, and boom, you get a bigger body candle, but you still have some nice upper wick here, right? More of an upper wick here than a lower wick. Then you get followed up, volume drops off again. You get another, this candle and this candle are almost identical, right? Another spinning top. Again, volume drops off a little bit more, and then boom, look at this. See how the volume just kind of spiked there. You get that spike of volume here, right? Now, this is a great example of where I would not have likely, well, I can say right now, I would not have gotten triggered in. But what I'm looking for is the trades that when this does roll over, it just rolls, right? I want to see, ideally, I want to be able to get, 2R out of a move, right? So how do you trade? Like, so for instance, if Gisela's looking at it, how do you trade this, right? This is from top to bottom. I mean, that's a big candle, right? If you bracket that, right? If you bracket that, you've got nowhere to go with it, really, right? So how I would trade this is I would look at that with that kind of volume. I would want to get a strong close below this and then set up a limit sell. Okay. So how I would have done this is this candle here. And again, if you notice, this really didn't close below it, right? It closed right at it. I'm looking for, this would be the key candle that I would need a strong close below it. And then I would have looked to set up like a limit sell, probably like right here, with a stop up in here, right? Because again, you have to, when you set up any trade, you have to be sure to be looking at what your reward to risk is, right? So for me, I need to see a minimum reward to risk of 1.2, 1.4. That's a minimum, but ideally I'm going to see 2. Okay. And so when I look at this, if I was just going to bracket this, right? If I just bracket this candle, I would be targeting down here, right about here from where I'm going to look to take profit. I never look to go, like people go, okay, well, target the lower day. Well, that's going to, your level of support is going to be here, right? Yeah, this is where it bounced, but I'm going to be in front of that. I don't want to, say that I need to get all the way back down here. I would rather get, or maybe if I use that pre-market level right there, but somewhere in here would be where I would have to take, profit. So if I just bracketed this candle, okay, yeah, I guess you could get like maybe 1 point, I don't know, it's close, right? If we, like, this would have been the trade, right? If I took this, that's my entry, my stop. And again, it's not exact, but so that's 1R. I don't know, probably not getting 1.2, maybe to here, maybe that's a 1.2. That's really close, right? So again, I would look at this immediately and go, I don't know, do I want to take that trade? Because, I want something that has a very obvious risk to reward. But let me remove a couple of these lines. So Corey, back to your question. The candle that would have shown me that this was a sell-off, that this was strong, was this candle, right? And I would have thrown in my, my limit sell here, right? Quite frankly, I'm looking to get triggered into that. Like this would have been a close. I'm ideally, like, if I say I'm going to see a close below that level, I really want to see a close like somewhere. Zoom in. This candle closed just way too low for me. I would have wanted to see this candle followed by another candle that closed like maybe here, right? And then see if I could get, a 2 candle pullback, to here with, small candle with a big upper wick, trigger me in and then roll, right? So there's an example where I would not have gotten triggered, right? I would have gotten triggered on this here, but I wouldn't have left it open that long. If I'm looking for something that is going to trigger and then run, right? If I, got triggered in and it came all the way back up here, well, that's telling me that the trade isn't that strong here, right? To go short here. Now, the other thing, let's just do this. Again, we're looking at, this is not my ideal candle. Again, that's kind of a huge doji, right? I'm looking for like a shooting star, right? Small body, big upper wick, right? So when we look at this, right, and we go look here and it's 10 o'clock, well, 10 o'clock, right, was this candle here, right? And if you look here on the volume, right, I'm not seeing a volume spike, right? Ideally, what I want, me personally, is I want the time frame that I'm seeing the setup on, whether it's a 3-minute or 5-minute, I want to see that also visible on my 15-minute, my 30-minute, ideally, right? So I want the charts to be in alignment, and I'm not really seeing this. So I'm looking to go short here. I'm not really seeing, I want to see the volume spike here. I'm going to see a volume spike here, right? I'm not really seeing, the volume was dropping off here, right? So, you would have had to really sit through this for a long time today to make this worth your time, right? Let's just zoom in a little bit. Let's keep going, see if there's anything here that would have caught my eye, right? Even here, this candle, right? I don't see, there's no volume spike, right? So it's not going to happen every single day on every single chart, right? So you can, and this is just one of my, trades that I'm looking for, right? So, here, right, you could have played this double top, right? But again, right, it just bounced, right? Volume, right? The volume is key here for me. And I'm just not seeing, big volume spikes. But let's go to, there was one I wanted to show you from yesterday. Yeah. Okay. And this is an example of how not to let yourself get, I mentioned like timing, right? Timing is everything. In addition to what you see and the candles, but timing is key. You can be right on your thesis. You can be, you could be looking at this and going, I think this is it, right? Great looking setup again, right? Boom, boom, boom. Same three candles as what we saw as what we were talking about with Tesla, just 10 minutes ago. Big candle, big volume, right? Next candle gets smaller, but look at the increased volume, right? So that's what I'm looking for. I'm looking for a sign that this move is running out of steam. I'm looking for a sign that it's exhaustion selling. Excuse me a second. So here, and again, this is the chart from yesterday. So here, and then you get this, here's that hammer candle, right? With big volume. That's exactly what I'm looking for, these three candles, okay? So would I have taken this trade? Well, so, and I was looking at this yesterday, right? I was like, okay, that looks great. Let's go into the higher time frames and let's see how it looks. Go into here, and this, let's see, this is 945. So 945 would have been, between these two candles here, right? So this one here, there's 945, right? So think about this, right? This candle happened at 945, right? These two candles, if you look there, that's not looking bullish to me, right? That's still looking bearish. So all that tells me is it's not the right time. I still might be right at some point that this is going to bounce out of here, but this is not the right time, right? So here's this candle again, 945, and then here's 945, here's 10 o'clock, right? Look at that big upper wick, right? This is still telling me, it's still bearish. It's not the right time yet, right? So again, you can be right on your thesis in terms of what you think it's going to do, but wrong on the timing, right? And a lot of the times we get caught in that. We'll take this trade, right? And thankfully, I mean, this would not have actually gotten triggered until over here if you held it through that, right? But sometimes I'm surprised that like it didn't. Like normally this is how people would have played that hammer entry above. I'm surprised that this candle didn't go up above, right? Normally that's what you see. You'll see a wick of this candle will wick up there, trigger and all those orders, and then it rolls. Okay. Now look at this. Okay. Again, I look at that and I go, okay, big volume spike, right? But again, it's not the hammer that I'm looking for, right? I want to see the hammer. I want to see a big volume spike. Like I want to see this candle right here, either bearish or bullish, doesn't matter to me, but I want to see this candle right here, especially after volume dropped off like this, right? If volume had dropped off like that much, and then boom, you get that volume spike here, I want to see that with a hammer. Okay. So would I have taken it? No, I would have still been patient. I would have been sitting on it, and again, go back, let's see what time this was, 10, right? So okay, so 10:15, right? You're looking a little more bullish here, right? But if you think about it, in the higher time frame here, you need to get a close above this candle, right? Just because you get a nice little bullish candle in here doesn't mean that that's the bounce and it's going to roll. I want to see it close above. Look at this right here, okay? The bottom of this body, the top of this body, the top of this wick are all at the same level. See that? Right here, right here, right here. That tells me that's the level that it needs to get above in order for this to go bullish. And look what happens, right? And that's why I love the higher time frames, right? They're going to keep me out of a trade or have me just be patient and wait for the right time to get into the trade. Okay. So here, right? I'm saying I need a strong close above this level, right? This is the level that I'm looking for. Let me remove this, right? I'm looking at the 15-minute. I go, okay, still looking pretty bearish all through here. Well, that's not going to look bullish to me until this level is broken, okay? This level right here. And it tried here, and here's your failed breakout. Here's your failed breakout. What does it do? Pulls right back down, right? Now you get this hammer down here, but again, there's not, look at the volume. Volume's that was 12.15. What does it look like at 12.15? 12.15 right there, right? So nothing is looking to me like it's, ready to reverse. This doesn't show me that it's ready to go bullish until it broke out here, right? And then it pulled back. So again, I wouldn't have ended up taking this. Yeah, Corey, what are the two red lines? Gisela, the two red lines here are just basically, a couple things. It's the clear, obvious channel that price was in. And actually, I should move this up a little bit. Right. So the two red lines, all I was doing was representing, Gisela, where people would have entry and stop. I just, I'm not taking the time to color code them like green and red, right? But just in general, like if people were going to take the breakout of this, right? They were going to take the breakout of this. That red line basically would have been their entry, right? So Corey, let's see. I would have to go back. What do we have on Friday? We did this on Friday. I think I showed you all. Is it Friday? Corey, I'll find one if we have time before the end of this session. I will show you. All right. So again, on this, it's just timing, right? So this didn't actually work. This wouldn't have worked until it broke out of this. Think about how long you would have been if you got triggered into this here, how long you would have had to sit through and hold this, right? So sometimes you just have to look at that trade and go, okay, A, higher time frames are showing me, telling me it's not time yet. And also B, I'm not seeing, so I think the timing is off, and I also don't see that reward to risk that I want to take, right? I mean, this would have just been painful to sit through this until it finally broke out. And then, what do you end up making? You don't even make an R on this, right? Because if that was your original setup, actually, you would have actually ended up moving your stop down below here. So, let me show you Tesla from yesterday. I want to make sure, Corey, I want to make sure that I cover the examples I wanted to give on the 5-minute trailing stop. I got 12 minutes left to do that. And I've got two really good examples. Actually, let me go first to the Qs. I'm going to show you all a trade I took yesterday, okay? Which is actually similar to what we were looking at with Tesla today, okay? So here's the Qs 5-minute chart here. And Corey, actually, this will give you a good example. Now, keep in mind, this is not, again, the double tops, double bottoms with the volume spikes, all that. That's just one trade setup that I'm looking for, right? I have different strategies that I trade. And so, for instance, on the Qs here, right? So I want to show you what I did yesterday on the Qs. So very similar to what we were just looking at with NVIDIA and also with Tesla, okay? Here I was looking at the Qs, okay? And I was noticing here that it came down here, and I'm just looking at all, here was a volume spike, right? and you go, okay, great, volume spike. Let me zoom in to yesterday over here, 15-minute, right? So this is a really good example about timing, okay? So here was the move down, and here's that volume spike, right, with the hammer, okay? 9:45. I look at this at 9:45 and I go, on the 15-minute, I go, yep, nope, not ready. Still looking bearish to me, right? So immediately that 15-minute, just the 15-minute chart alone kept me out of this trade and kept me from getting into a losing trade. Because look, if I had bracketed this hammer, right, which a lot of people did, entry there, stop down here, what happened? Boom, boom, and then fail, right? There's your clear examples of failed breakouts, right? People see that hammer with volume, they go, okay, take that, right? But I go 15-minute, I go, no, it's still looking bearish to me. That's not looking bullish. I'm going to sit on my hands. I'm not going to do anything. So, and anybody who took that would have been stopped out. That would have been pretty much a full R loss, because this didn't even really give you an opportunity to move your stop, right? So if you look now, all it did yesterday was it was just caught in this channel, similar to what we just looked at with NVIDIA and Tesla, right? Just hanging in this channel, right? And so now I'm saying, okay, well, I need to get a strong close above this level, right? And I was watching it, I saw this candle, I'm like, yeah, but that's not really a strong close to me, right? And plus, look at this. It's an okay close. You know, here's the thing, it closed above the level, but it wasn't a strong close. And I'm going to give you the example what I ended up taking, okay? Plus, I was looking at this when it came up here, 1, 2, 3, 4, 5, 6, okay? Do you really think I'm going to get into a trade to go long after 6 green candles in a row? Not me. 6 green candles in a row, right? No. So this was a great example of me just being patient, sitting on my hands. I thought, right? I thought there was a good chance that the Qs would break out, right? It had been hanging down by the low of the day, and it was just chopping around here. It wasn't doing a whole lot. I'm just reading the sentiment of the candles, a lot of decision, a lot of selling pressure, buying pressure, back and forth. I'm like, okay, here's the breakout, but it wasn't strong, no strong close. Okay, so I sit back and I wait. Right now, my actual entry I used on the 15-minute. I was looking at this and I'm going, okay. Basically, what ended up being the point of control in the day was where I put my entry that I eventually got into the trade with. So I didn't take it here because, again, 6 candles in a row, I'm expecting another pullback, right? Even though it closed outside of this level, right? In my original level, the original line that I had that I needed it to see it close above was here, right? So I've got 3 lines in there just so you understand what I'm looking at. I want to see a close above basically this candle here, right? Close above it, this line. But if I just draw that line through there, that high, that goes a little bit through it. But anyway, you get the idea. That's the level that I need price to close above before I'm willing to get in, okay? And I'm only willing to get in on a limit buy. I want to see, show me the strength, then I will execute my order. So price comes up here, not a great close, big upper wick, plus all those green candles in a row, and I decide I'm going to wait. Just sit back, and maybe it runs, right? I don't know. But me, I just sat back and waited. And then it pulled back, and then it chopped around a little bit more, and then boom. That's the candle right there. That candle right there, and look at the volume, right? Volume picked up. So again, this is not one of those ones where I'm looking at the double top, double bottom, hammer, shooting star, all that. This is just purely, this is in a channel. Let me wait for a strong close above it, and then I'll get in on a limit buy. Okay. So finally, boom, strong. You could see how strong that candle is. Look at this candle, and look at the difference in the strength, right? The sentiment of those candles. And this one was the 6th green candle in a row. This one happened after a 3-bar pullback, right? Price came up here, got rejected by this level once again, 3-bar pullback, but then boom, with volume, right? Strong close. I go over immediately to my 15-minute chart, right? So this candle happened at 12:25. Where did that come in? Basically right in between these two candles here, right? But I look at my 15-minute chart here and I go, all right, there's my close above. Based on the 15-minute, where do I want to set up my limit buy? Well, as I looked at it, and it just happens that the point of control from yesterday was right where my entry was. But how I determined that level was the low of the body of this candle, the high of the body of this candle, the high of the body here, the high of the body here, right? I'm just the high of this candle, like I'm just looking left, right? I always tell Ernesto, I'm going to put it in Slack, okay? It won't be on the dashboard. It'll be in, I'll put it in Slack, okay? So that is how I pick that level, right? Actually, probably a little bit higher. Let me just, in all fairness, it was probably right about, no, actually it was lower. It was 347 or 374. What was it? 374.30, I think. No, it wasn't 30 because I got triggered. Anyway, I'm just going to leave it right where it is. You get the idea. So this candle came in and then I threw in my limit buy. Right? So now this was the level I wanted to close above. I got the close. Let me remove this now because now that level's broken. Here's my limit buy. What is it? It comes right down, hits my level, triggers me in, and then it runs, right? All about timing. It wasn't the right time back in here, right? So Corey, here's your example of how that works, right? And again, this could have easily just strong close and that could have been the start of the run. You never know, right? But for me, I would rather see that strong close and then I never want to buy up here, right? I don't want to buy up here because quite frankly, I'm looking at this level here as my main level. I'm going, okay, I need to be able to get at least 1 point. And now it doesn't mean I'm taking all at that level. It just means I need to be able to get 1.2 or 1.4 up to here, right? Reward to risk. So again, if I drop in this trend line, if I just show you this, right? I move this up, you can clearly see I definitely had at least 1.2, 1.4 to this level. Why this level? Well, it's the top of this body here, the top of the body here, and it's also the pre-market high, right? That's now, again, that doesn't mean that that's where I'm necessarily going to take it all. That just means that by that level, that's where I need to be able to, get to, okay? Now, we only have another 2 minutes, so I want to just real quickly walk you through quickly once it starts running, right? So as soon as this triggers in, right? And as soon as it breaks this level here, my stop went right under here, right? As soon as this candle came in here, my stop went right underneath this level, right? Right here, right? Because look at, I get triggered in at the almost perfect entry, right? Lower wicks triggered me in, whether it was this candle or this candle, I don't recall, but I got triggered in the lower wick, so my stop immediately went here. But in the last minute, I'm going to give you the key to being able to follow this all the way, right? And we've talked about this before. It's the 5-minute 2-bar trailing stop, okay? As long as each successive candle makes a higher high, I'm talking about a bullish trade here, a higher high and a higher low, count back 2 candles, move your stop. So I'm just going to go run through this really quickly, right? So stop as soon as it broke above as soon as I got to close above this level. You probably would understand why, right? That's my key level. I want to close above here. My stop went here, right? Next candle, right? Higher high and higher low. It did. Count back 2 candles. 1, 2. Now my stop is below this candle. This candle, higher high and higher low. Yep. Count back 2. 1, 2. Now my stop is below here. Now, right? I'm already above break even. I'm already locking in. I'm not at risk for giving back anything. I've already locked in my profit. And then you can just, if you want to, Yates is coming on now, but you can, I'll just finish this up real quick. This candle, count back 2. It's below this. This candle, count back 2 here. This candle. Again, the key is it needs to make a higher high and a higher low compared to the previous candle, right? Let's jump all the way to here. Higher high, higher low. Yep. My stop's here. Next candle. Yes, higher high and higher low. Doesn't matter whether it's bullish or bearish. Count back 2. Now my stop is here, right? You can see that. 1, 2. Now, next candle. Did it make a higher high and a higher low? Well, no. It looks like it made a lower low and a lower high. So what do I have to do now? I have to wait for this candle to be broken higher high and higher low. This one doesn't count now. This one comes in. I do get a higher and a higher low compared to this. Count back 2. 1, 2. Well, now I can put it below this candle, but this one was the lower one. And at this point, the way this has moved, my stop's here, right? Next candle. Yes, higher, 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 low. Count back 2 here. I'm basically going to leave my stop where it is. Then this one, higher, high, higher, low. Yep. Count back 2. Now my stop is here. Next candle. These candles come in, pull back, right? Wouldn't have stopped me out. Now again, I need to get a higher high and a higher low compared to this candle right here, because these don't count. Boom, I get it. Count back 2. 1, 2. Well, I'm not going to put my stop here, so I would just go below here. I'll just leave it where it is. And anyway, you can just finish this off on your own. You can see how you can move your stop as the price moves higher, right? And this actually would not have trailed me out likely until this candle right here, because right here, higher high and a higher low, 1, 2, I would have put my stop. I don't know. It would have been close, right? I was already out at this point, but you get the idea. You can just use that 2-bar trailing stop to continue to move with the price movement. And again, I always like to say that I'll take off 90% at a certain level and hang on to 10% to let it run. This was actually later in the day. I had to leave the house, so I was just already out of the trade at this point. But I did want to just show you that. Let's see. Yates, are you here?
Yeah, man.
Okay, cool. Let me stop the share. All right, so I'm going to turn this over to Yates. Hope this was helpful for everybody. Corey, I hope this was the example you were hoping to get in terms of, you said, do I have an example where that works? When you are welcome. I'm going to stop the recording. Appreciate you all being with me this last hour. Martina, thank you. Appreciate it. Let me go here. Stop.